Overnight, we saw a continuation of the bond rally as rates went higher, bonds under pressure. We saw rates bumping up here. We saw the 10-year bumping up to a level of 3.217. 3.217 was the high. That's the highest point that we have seen in over a week. We saw another move, though, in the 2-year. The 2-year actually went to multi-year highs. We saw the 2-year bump up to 2.907. Initially this morning, that was coming off of the news from the Fed yesterday. The Fed more hawkish than what the market had priced in. So we once again saw yields rising. However, the equity market started to sell off in the middle of the day. And with that, we saw a switch in the trends in the bond market as well. We had some news coming out of the ECB, concerns about Italy and what's going on over there, and therefore we saw the equity markets begin to slide, and we saw a bid for U.S. treasuries as they sold European treasuries, and with that we saw rates coming under some pressure. The 10-year back down to basically where it started today, around the 3.16 level, and we saw the 2-year come under some selling pressure now around the 2.87 level. So we are now seeing equities down on the lows of the day, with bond yields and the lows as well, as we see that flight to quality play entering back into the market. We will see if that's going to continue into tomorrow when you see the activity here as far as the bond markets, because there is some news coming out of Europe that will continue to drive this market. When you look at what's going on with the Brexit and you look at what's going on between Italy as well as Spanish interest rates, we're seeing credit spreads widen there, and therefore we're seeing again the bid for U.S. treasuries to this point at the end of the day.